All right, so we're diving into Verizon stock today. Got a recent analyst report, and we're going to break it down. See if Verizon's a good investment or not. You know what I mean?
Yeah, absolutely. This report, it really, digs deep
Hmm.
into how they're doing, what their plans are for the future, and what's really driving, their stock and their position in the market.
Perfect. So, first things first. The report says Verizon just had an amazing quarter.
Yeah.
Like, way better than anyone expected. They got a ton of new subscribers, right?
Yeah, you're right on the money. Almost 1 million new postpaid subscribers just in Q4 alone.
Well, okay, hold on. Just so we're all on the same page, can you quickly explain what a postpaid subscriber
Oh,
is?
yeah, sure. So postpaid subscribers, those are the people who pay their bills at the end of the month. They're usually on contracts. These are the customers that like telecom companies really want. They tend to be way more reliable
Yep.
in terms of revenue.
Then prepaid customers.
Got it. So basically, these are the customers that bring in the steady cash. So 1 million new postpaid subscribers. That's huge. Yeah, it's massive. It's actually their best quarter for subscriber growth in over a decade.
Wow. Okay. So what's driving this huge jump in subscribers? Is it just that everyone suddenly decided they need a new phone?
I wish it were that simple. The report highlights a few key factors. First, their new My Plan and My Home offerings. They seem to be really resonating with customers. These plans give people way more flexibility and choice compared to their older, more rigid plans.
Gotcha. So they're giving people more of what they want, more options,
Yeah.
more control.
Exactly. And on top of that, fixed wireless access is gaining some serious traction.
Okay, wait, break that down for me. What is fixed wireless access?
So it's basically delivering internet service wirelessly, using cellular networks instead of
Oh,
cables.
interesting. So like 5G internet for your home.
You got it. It's a really attractive option,
Mhm.
especially for people who can't get traditional broadband or just want a more flexible alternative to cable.
Yeah, that makes sense. People are cutting the cord left and right these days. Speaking of cutting-edge technology,
Yeah.
the report also mentioned 5G, right?
Yeah.
Is that playing a role in the subscriber boom too?
Oh, absolutely. Their ongoing rollout of C-band 5G is definitely attracting new customers.
Okay, so remind me what C-band is again?
Right. So C-band is a specific frequency range that offers like a sweet spot between speed and coverage for 5G.
So it's all about finding that balance, huh?
Yeah. And it's crucial for Verizon to stay competitive in the whole 5G race. They can't fall behind.
Right. So you got these attractive new plans, fixed wireless is taking off, and they're pushing hard with their 5G rollout. It feels like Verizon's got a lot of momentum right now.
Yeah.
What about the future? Does this report give us any clues about where they're headed?
It does give us some insights. Looking ahead, they're projecting moderate growth through 2025, with their wireless service revenue expected to climb somewhere between 2 and 2.8%.
Okay, not bad. But I feel like there's a but coming.
You know me too well. There is a bit of an asterisk there.
Here's where it gets tricky, huh?
Yeah, you could say that. A big chunk of that projected growth is coming from how they're classifying revenue from device protection plans.
Okay, so they're moving money around.
They're shifting that revenue into a different category, which bumps up their projected revenue numbers.
So they're not exactly cooking the books,
Mm.
but they rearranging things a bit.
Exactly. It's more about transparency, I think. They're
Mhm.
acknowledging that this accounting change makes their revenue look a little better than it
Well,
might otherwise.
okay, fair enough. But even with that adjustment, their projected free cash flow for 2025
Still massive.
is still massive. Give me the numbers.
Somewhere between 17.5 and 18.5 billion dollars.
Okay, so even with the accounting shuffle, they're still going to be swimming in cash. But they're also spending a ton of money, aren't they? I mean, they're investing heavily in building out their 5G infrastructure,
Yeah.
expanding their fiber optic network, FiOS, and then there's all this buzz about their push into artificial intelligence.
You're getting on a key point here. These are massive investments that could potentially pay off big time down the road, but they're also going to put a squeeze on their free cash flow in the short term.
Right. So it's a bit of a gamble.
The AI market especially is risky. It has huge potential for sure, but it's still early days. And there's no guarantee that Verizon will be a major player.
So a potential gold mine, but also a potential money pit. Sounds like a classic high-risk, high-reward situation. All right, so let's shift gears a bit. What are the analysts saying about all this? Are they generally optimistic about Verizon's prospects?
They're cautiously optimistic, I'd say. The average price target they've set for Verizon is $47.43. which is a decent amount higher than where the stock is trading right now.
So some analysts think the stock is undervalued, like it has room to grow.
Exactly. The bulls, those who are more optimistic, see a lot of growth potential in 5G, FiOS, and their AI initiatives. They think Verizon's investments in these areas will pay off big time and lead to higher profits down the line. But the bears, the more cautious analysts, they're a
Mhm.
bit more worried.
What are they worried about? Is it just the massive amount of money Verizon is spending?
That's a big part of it, for sure. Those big investments come with big risks. The bears are also concerned about the competition. The telecom industry is super competitive. Verizon's not just battling it out with AT&T and T-Mobile. They're also facing competition from cable companies and other newer players offering wireless services.
So it's a crowded field.
Yeah, and all this competition can put pressure on prices, make it tougher for Verizon to maintain its market share. And then, of course, there's the uncertainty surrounding the AI market. It's a bit of a wild card right now.
So we've got the bulls who see a bright future and the bears who are a bit more wary. Sounds like a pretty typical situation when you're analyzing a stock. This report also mentioned something about Verizon's economic moat, and I've got to admit that's not a term I hear every day.
Right, the economic moat. This is a really interesting concept. When you're evaluating a company's long-term prospects, it basically refers to a company's competitive advantage, the things that protect its profits and market share from rivals. The report gave Verizon a narrow moat rating.
Okay, so what does that mean exactly? Is a narrow moat a good thing or a bad thing? And what contributes to Verizon's moat in the first place?
So think of it this way. A wide moat means a company has strong, durable competitive advantages that are hard for competitors to overcome. A narrow moat suggests that while a company has some advantages, they're not quite as impenetrable and could erode over time.
Okay, so not ideal, but not terrible either.
Right. In Verizon's case, their biggest advantage is their massive network infrastructure. They've spent billions and billions of dollars building out their network, especially their fiber optic network, FiOS. That gives them a real edge over smaller competitors.
It's like having a bigger, better network is their superpower, right?
Exactly. Plus, they have incredible brand recognition. Verizon is a name people know and trust. Those are the key factors contributing to their moat. But the report also highlights some things that are preventing that moat from being wider.
Let me guess. It's those massive expenses we talked about earlier.
You got it. The telecom industry is incredibly capital intensive. To stay ahead of the game, Verizon has to keep pouring billions of dollars into maintaining and upgrading its network, and all that spending eats into their profits. They're kind of stuck in this cycle of having to spend huge sums just to stay competitive.
So they're like a hamster on a wheel, constantly running but not necessarily getting ahead.
That's a good analogy.
Yeah.
And then there's that fierce competition we mentioned earlier, all those rivals vying for customers and market share. It puts pressure on Verizon to keep prices low, which can impact their profitability. And remember that uncertainty surrounding their AI initiatives. That's another factor that could affect their moat in the future.
Okay, so their moat is narrow because of the huge costs of maintaining their network, intense competition, and the unpredictable future of the AI market. Got it. But this report also dug into their latest earnings call, right? What were some of the key takeaways from that?
Well, they emphasize that their new offerings, like My Plan and My Home, are really resonating with customers. They specifically called out their success in attracting new customers in the Latino market. They're clearly targeting new customer segments and expanding their reach.
So they're not just relying on their existing customer base. They're actively going after new markets. Smart move. Did they say anything about their 5G rollout?
Oh yeah, they did. They're full steam ahead on their 5G deployment. They highlighted the progress they've made with C-band spectrum and the investments they're making to build out their network infrastructure. They even talked about some new deals to provide 5G connectivity for the U.S. Air Force.
Wow, 5G for the Air Force. That's impressive. But again, all of this comes at a cost, right? How are they managing all these expenses while still trying to grow the business?
It's a balancing act for sure. And the report actually dives into how they're managing it.
Okay, lay it on me. What's their strategy?
Well, they've rolled out some pretty aggressive cost-cutting measures.
Ah, the belt tightening everyone loves to hear about.
Yeah, not exactly the most exciting topic, but it's crucial for them.
So what are they doing specifically to cut costs?
One big one is their voluntary separation program, which is basically a fancy way of saying they're offering employees incentives to leave.
So it's a way to trim down their workforce without resorting to layoffs.
Exactly. Costs them some money up front in severance payments. but they expect to see significant savings from this program in the long run.
Okay, that makes sense. But what about their debt? With all these investments, their debt must be through the roof, right?
They do carry a lot of debt, no doubt, but they're actively working to pay it down. The report mentions a key metric called the net unsecured debt to adjusted EBITDA ratio.
Okay, and for those of us who aren't financial wizards,
Basically, it measures a company's ability to manage its debt.
got it. So how's Verizon doing on that front?
They ended last year with a ratio of 2.3 times, which is a bit on the high side, but they paid down about $7 billion in debt last year and plan to keep chipping away at it.
So for someone like me who's not a financial expert, what does that tell us? Is that debt level a major red flag?
It's something to keep an eye on, but it's not necessarily a deal breaker. What's important is that they have a plan to reduce their debt, and they're making progress toward that goal.
All right, that's reassuring. But what about their commitment to shareholders? Can they keep paying dividends? While pouring so much money into growth, that seems like a tough balancing act.
It's a key question for a lot of investors, for sure,
Yeah.
and Verizon addressed it head-on in their earnings call. They made it clear that they're committed to their dividend.
Which is music to the ears of a lot of investors.
Exactly, especially those who rely on those regular payouts. They also hinted that they might start buying back their own stock once their debt to EBITDA ratio gets closer to 2.25 times.
So once they hit that target, they could start repurchasing shares, which could potentially boost the stock price.
Exactly. It's a way to reward shareholders and potentially increase the value of their investments.
Okay, so it sounds like Verizon is trying to walk a tightrope here, investing in growth, while also keeping an eye on their finances, reducing their debt, and taking care of their shareholders.
You got it. It's a lot to juggle.
It is. So after this deep dive into Verizon, what's your overall assessment? Is this a company worth considering for someone's portfolio?
Well, we've seen they have a lot going for them. They're the market leader. They've got a strong brand. Their investments in 5G and AI could really pay off. But those investments do come with risks, and the competition is fierce.
So it's not a slam dunk either way. It really comes down to an individual investor's risk tolerance
Yeah,
and their investment goals, right?
absolutely. There's no one-size-fits-all answer when it comes to investing. But I think this deep dive has given you a much clearer picture of Verizon's business, their strengths, their weaknesses, and the opportunities and challenges they face.
I agree. It's been a fascinating deep dive. I feel like I've learned a lot about Verizon and the telecom industry as a whole. So for those of you watching, we hope you found this deep dive helpful. If you did, please hit that subscribe button and ring the bell so you don't miss any future episodes. We're constantly unpacking interesting topics just like this one. And we're here to help you make sense of this complex world we live in. Thanks for joining us, and we'll see you next time on The Deep Dive.